Life's too short, my friends, to try to figure out the tax code to save you every penny of taxes that you have to pay. I got a guy just emailed right now. Seems like a nice guy. He wants tax specific information, which I certainly can't provide because I'm not a tax person. I'm just not. But his question was, he goes, hey, I know Medicare has a 2-year look back for IRMA. Do they use the 2 years ago tax brackets for IRMA or the current tax brackets for IRMA? So let me explain what this question is about. So basically, the income you made in 2020 will be what your premiums on Medicare will be in 2022. It's a 2-year look back, right? So you're paying Medicare premiums in 2022 based on what your income was in 2020. So his question is a good one. I don't know the answer. I'm sure some of you guys might, and I'm not going to take the time to look it up because it's irrelevant to me. But his question was, in 2020, the IRMA tax bracket was, we'll say, 175. In 2022, the IRMA tax bracket is 182. So which one do they use? he goes, I got to get this right because if I don't want to give the IRS one more penny than I have to because I've been giving them money for the last 40 years, and if I don't get it right, I could be paying an extra $900 in Medicare premiums. And I don't know. And even if I did know, I'm not going to tell him. He's not a client, A, and B, I'm not a tax person. And C, there's no upside for me whatsoever. So I said, I don't know. You might have to do some research. And I said, is it really worth your time? So I've been in this business a long time. I've had many clients say the same thing. I'm not giving the IRS one more penny. I said, yeah, what are you going to do? He goes, I'm going to figure out my cost basis to the last penny. I'm like, well, how are you going to do that? I'm going to take the time. I'm going to look back at all my statements, like on a drip, a computer share. Let's say you've had Exxon Mobil and you've been paying $50 a month into it since 1983. Computer share doesn't keep your cost basis. They just tell you how many shares you have, to the last, I guess, the 53.163 shares or something like that. But they don't know your cost basis. Anyway, the point being is, he goes, so if I sell ExxonMobil, I know exactly how much I owe, and I'm not going to pay them one more penny. I say, yeah, okay, good. How long is that going to take you? Probably a couple of weeks' time, but I'm going to get it. Like, could you have used your time on other things? Now, like this guy right here, if $900, I mean, I get it, man. $900, that's not chump change for sure. I just think of all the other time you could use that time to lose that $900 to gain the time. I hope that makes sense because once you have look, if you're cash strapped, which I guarantee he's not, that's why he's doing what he's doing. If you're cash strapped, the $900 means something. If you're not cash strapped, the time means something. So you look at it like a seesaw. The more time you spend to reduce your taxes is time you can't do. You're mutually exclusive to do that time with other things that you might enjoy. The less time you spend to increase your taxes is things you can use that time to do things you might enjoy. They're mutually exclusive. As one goes up, the other goes down. As you have a certain threshold of money, the time value becomes more beneficial than the cash value. I hope that makes sense. So for every hour I'm spending trying to reduce my taxes, the net proceeds to me are less, simply because I already have enough money. I'm not cash strapped. I hope that makes sense. It's what we call it, minimize, in economics we call it, I want to think what this is called. Dwindling utility or something like that. Dwindling satisfaction. I can't remember off the top of my head. But essentially, like if you're a drug addict, one dose of dope doesn't do it anymore. Now you need 2 doses, if that makes sense. Your utility is being reduced for that 1 dose, and now you need to increase it. So you always have this, this is what chasing the dragon is. You're always looking for that other high, like you first experienced, you never find it. So dwindling utility essentially is kind of like once you have so much amount of money, like for instance, I love Guinness. I don't drink Guinness anymore. I don't drink any beer. My first Guinness is freaking awesome. My second Guinness is awesome -1. My third Guinness is awesome -2, and so on and so on. The level of enjoyment is reduced by the more I get. And there's a terminology for it. I'm just dwindling utilization, dwindling utility, something like that. Inherently makes sense, man. If you're starving Marvin, 1 cracker is good, but once you're full, 1 cracker no longer has the same measurement of satisfaction. And so in this case, the guy has so much money, he doesn't have so much time. His time is very, very valuable. His money is less valuable because his money is here, his time is here. But he keeps, because he's been focusing on the money his whole life, probably because he came from a background where he didn't have much. I completely get it. But now you're focusing on the wrong thing. To maximize utilization is to focus on your time. Your time value is more worth than the money value because you have a limited amount of time and it's growing sparser by literally the minute. Every minute is 1 minute closer to death. So focus on the important things. And the $900, if you, let's just say you got $2 million, $900 relative to the time and energy it comes to focus on the good times you're having is nothing, man. It's nothing. The diminishing utility of money versus the increasing utility of time. You just got to look at it like a chain, like a economics curve. The value of time as you get older becomes more and more valuable. The value of money as you become richer becomes less and less so. And if you just think about a basic economics, you can get that. And you're like, all right, what if I have to pay $900 more? All right, no big deal. Now, if I spent 20 minutes, is that worth it? Probably. But if I spend 4 hours, is that worth it? I don't think so. I mean, that's 4 hours. If you factor in how many hours you have left on this world of good producing hours, 4 hours relative to $900, that's what, 150, 175 bucks an hour, something like that. It's not worth it to me. Of course, I'm kind of lazy, so maybe that's why it is too. I mean, just frankly, just pay the IRS whatever they want, and I move on. All right. Love to hear your thoughts. We'll see ya.